Well, what do you know? Morgan Stanley with a new research note and a price target increase on Tesla stock to $250 per share, previously $200 per share. You know, I kind of feel like I predicted this. Here's what I had to say exactly 1 week ago. Price target, still $200 per share. Wonder how long until Morgan Stanley chases after the stock price, reverse engineers a ridiculous, vague reason as to why they've increased their price target, other than embarrassment for being wrong, and then gets roasted by some guy on YouTube who predicted ahead of time. Well, it turns out we only needed to wait a week. Of course, it was just a lucky guess that Morgan Stanley would chase after Tesla stock with a new price target increase. It's not like anyone could have seen this coming, and that's why I didn't make a tweet on June 7th with a picture of derp. Breaking, leaked photo of NPC Wall Street analysts about to upgrade their price targets, not because anything material has changed in their Tesla thesis or valuation model, but because Tesla stock is now above their price target. If your fair valuation changes because the stock price changes, not because something material has changed about the company and your investment thesis, you are a clown. So let's see what the independent thinking, pioneering, courageous folks over at Morgan Stanley, the group of clowns collectively known as a circus, have to say about Tesla and why they've suddenly increased their price target by $50 per share after Tesla stock has surged well past their prior price target. If it wasn't so sad, it'd kind of be funny. By the way, just a quick side note, I've been posting a ton of exclusive content over on Patreon and also for my Twitter subscribers. So if you don't want to miss out on any content, check the links in the pinned comment, or don't, I won't be mad, but you will miss out on a lot of content. AI dream meets auto reality, downgrade to equal weight. We see Tesla as an AI beneficiary and an auto company. High expectations on the former has brought the stock to a fair valuation, moving us to equal weight with revised $250 price target, bull case $450, bear case $90 per share. Later in this video, we'll look at some of the underlying assumptions behind the bear, base, and bull case. How embarrassing has it got to be for these clowns? If they ever see one of my videos predicting them increasing their price target ahead of time, who is this fucking dickhead on YouTube, and why does he keep predicting exactly what we're going to do ahead of time? We're all geniuses, at least according to our IQ scores. Why is this obnoxious twat able to predict our every move ahead of time? The answer, of course, is because Moron Stanley are a bunch of NPCs who do not know what they are doing. Now, they're smart NPCs, but this is a recurring theme. They keep misunderstanding, not getting it, missing the boat, and ending up having to chase after Tesla stock. It seems they're incapable of learning. I have to be upfront with you all. While the team has defended the Tesla overweight rating all year, I did not see this 111% year-to-date rally coming. Well, that makes one of us. I tweeted this at the end of last year. It's going to be interesting to see the Tesla stock year-to-date change in 2023, starting from an incredibly low base. Now, of course, I never give investing advice, but I will occasionally lay a few breadcrumbs, and these were breadcrumbs. I'm not surprised to see Tesla stock surging year to date. This couldn't be more hilarious. I don't have a time machine. I didn't post this tweet today somehow in the past. I posted it on December 30th because I figured what was going to happen. And sure enough, about 6 months into 2023, Tesla stock has absolutely surged. So, Adam Jonas, 0. Some dickhead on the internet, 1. Actually, if we are keeping score, I'm probably about 420,000 to 0. We think it's understandable and are sympathetic to the changes in the market narrative around the name. We're not trying to call the end to the Tesla rally, and from our discussions, continue to find a significant degree of investor skepticism and a lack of exposure around the name. AKA a lot of Moron Stanley's investor clients still don't get the Tesla story, still aren't in the stock, and guess what? At some point, they're probably going to figure it out. In case you don't know, if there's lots of buying activity on a stock, generally speaking, it's probably going to increase in price further. Just saying. While we move to equal weight, in our view, Tesla remains a must-own company in any EV portfolio. We see continued evidence that Tesla is emerging as an industrial standard bearer for one of the greatest industrial changes we've witnessed in over a century, the electric transport and renewable energy economy. This goes well beyond supercharging deals with the likes of Government Motors and Ford, and look for other potential areas of collaboration. Battery supply, they said it, these motherfuckers. You remember I've been talking about Tesla licensing their OS? Remember this, right? If you're a regular viewer, you'll have heard me saying this quite a lot recently. Where'd that come from, Morgan Stanley? They haven't been copying my homework, surely. Full self-driving, etc. to follow. Now, I agree on all of these. Battery, going to be a while, but the operating system, pretty likely. FSD, absolute no-brainer. Some investors may feel inclined to play the positive momentum from here. By the way, if you think you're an investor and you're, quote, playing anything, you're not an investor, you're in the stocks casino, very different things. But we believe the current price, at over 100 times our 2023 US GAAP earnings per share forecast, discounts significantly more than Tesla as just a dominant EV company. We believe stock upside from here must come despite our view of continued downward skew to consensus estimates, which may prove more challenging. I mean, this is a gigantic episode of Told You So. We raise our Tesla price target to $250, up from $200, the bear case to $90 from $70, and the bull case to $450 from $390. Again, we will look at some of the assumptions behind the base, bear, and bull case soon, so if you want to see exactly how they're coming to these numbers, stick around. Following these changes, we change our rating to equal weight from overweight, given a relatively full valuation and a more balanced risk-reward, and highlight key drivers and investor debates for the stock at this level. Tesla as an AI company. Following Nvidia's blowout quarter, AI-exposed stocks have outperformed broadly and investors are constructing portfolios with exposure to the theme. While we understand why Tesla gets a serious mention in an AI conversation, we believe a re-rating on this theme is in the realm of the non-disprovable bull case. Autonomous driving and generative AI still remain, in our view, two very different technological disciplines. While the market may want to dream on the AI theme, we'd prepare to wake up to the sound of a blaring car horn. Tesla as a platform operator who can provide services to competitors. As Tesla approaches the $300 level, we think the stock begins to discount a business based on recurring software-derived and software-delivered revenue, e.g. software as a service, from its vehicle network and other services beyond just the one-time sale of automobiles. While we did not expect this recent rally in the company's shares, of course they didn't, we suspect many investors may be again looking at ways to justify the valuation beyond the confines of a unit times price automotive and hardware model. We've already begun to see this play out. Ford, Government Motors, and most recently Rivian have joined Tesla's increasingly ubiquitous supercharging network in the last month. Tesla earnings still at risk. Despite the recent rally, we expect material negative revisions for Tesla consensus earnings forecasts and continue to expect a long-term trend of price down ATP declines at Tesla, driven by intensifying competition with Chinese EV players and a slowing auto consumer. Strangely, I notice a lack of Morgan Stanley mentioning Tesla could also continue to actually make their vehicles cheaper, as in produce them for less, because they're finding new ways to do more with less, benefiting more from economies of scale, deleting parts and processes, which is another way they can keep lowering prices without earnings suffering. Strange omission. It seems the market is either looking through the potential revisions or assuming a less severe earnings downdraft than previously expected. Our forecast of $3.03 for 2023 non-GAAP diluted earnings per share is around 10% below the consensus estimate. If we pass through the worst of Tesla's price cut-driven estimate reset, is $3 a share the bottom for Tesla earnings this cycle? Rise of the Chinese OEMs. As the largest, most saturated EV market in the world, the slowing of the Chinese domestic EV market has accelerated investor questions about a potential release of Chinese supply into the export market years ahead of expectations. Just want to jump in here. Years ahead of whose expectations? It's inevitable. The Chinese EV invasion will happen. People have been talking about this for some time. It is inevitable. No one should be surprised about this. We have yet to see another OEM that has been able to rival Tesla with an EV that offers current attractive unit economics. This is a very important point. The Tesla hegemony established in the West has made the company seemingly invulnerable to competition up to this point. Accurate. Chinese OEMs are the first that may, keyword there, may, have a shot at disrupting the way investors view Tesla's EV dominance. Although we acknowledge that there are many factors contributing to Chinese OEMs gaining share in the home market, incentives, increased capacity from multiple players, etc., Tesla has been losing share in China since the peak in 2020. Yet still miraculously selling more and more vehicles quarter over quarter, year over year in China. Funny how that works, isn't it? Growing EV market, you can quote lose market share yet still be selling more vehicles in any region at any given time. Our message is that investors should get comfortable with Tesla sharing the EV sandbox with China in the quarters and years to come. Completely agree. Good thing the sandbox is growing at an exponential rate. Valuation. Relative valuation. A recent run that has taken the stock as high as $274 before yesterday's close of $259 has brought the stock to over 50 times our 2023 EBITDA versus the stock's 3-year historical average of 39 times and the 5-year average of 27 times. We think that Tesla might have been caught up in the AI multiple premium given the recent wave of interest surrounding the technology. By the way, I strongly disagree on this. Now, there may be an element, but remember, start of this year, Tesla stock was down about 80% from all-time highs, still in a dominant position, nothing meaningful had changed. Just panic selling, big funds trying to start the year with a clean slate, getting out of some stocks. This is a great way to miss the forest for the trees here. Oh, lots of AI stocks went up a lot. Maybe the market thinks Tesla's an AI company now suddenly. I mean, maybe so. By the way, it is an AI company, one of the world's best, but I personally think Morgan Stanley may be off the mark here. AI component, maybe a little bit, but seems Morgan Stanley are ascribing most of Tesla's recent surge to interest in AI. Unlikely. We would urge caution against grouping all aspects of AI, for example LLMs with vision-based neural network training, into one bucket. As a result, we believe that Tesla's current valuation is relatively full. US EV OEMs risk-adjusted return. Oh, fuck my life, dude. So, I'm not going to spend too much time on this, but long story short, Morgan Stanley currently see Rivian as a significantly better risk-adjusted opportunity than Tesla. Not sure this will age well. Don't get me wrong, Rivian may be successful, and they're starting from a lower base, but as I've said in the past, they still need to climb multiple Mount Everests blindfolded with no food and no water just to get to where Tesla was years ago. It's possible they'll be successful, but in my opinion, there is significant risk ahead of Rivian that Morgan Stanley seem to be oblivious to or ignoring. They also seem to be ignoring the potential reward on Tesla. Autonomy, the humanoid robot, continued dominance in EVs. It's hard to get my head around these folks sometimes. Changes to the bull, bear, and base case scenarios. Out of the $50 added to our Tesla price target, $42 was comprised of increases to our value of Tesla Network Services and Tesla Energy. Now, question, anything meaningful changed in terms of Tesla Network Services or Tesla Energy recently? Spoiler alert, no. And don't try, the supercharging access. As I've said, per my valuation model, supercharging network third-party access, less than 1% of Tesla's total profit in 2030. Does not move the needle, can't be justified. It almost seems like Morgan Stanley thought, oh shit, Tesla stock went way past our price target. Let's make some tweaks in a valuation model. Just increase some numbers until we can justify $250 per share, even though nothing fundamentals changed, just so we can get to $250 so we don't look like morons. That's what I personally think may be the reason that these numbers have changed. Let me know what you guys think. Bear case valuation. Our $90 bear case, which was previously $70, ascribes $60 a share for automotive, which assumes 5.5 million units sold in 2030 at a 13% EBIT margin. Yeah, this is a very non-serious bear case. And I understand it's important to model a worst case scenario, but bro, does anyone, seriously, does anyone see Tesla doing just 5.5 million units in 2030? They're already around 2 million annualized run rate. It's 2023. A couple of years from now, they'll be in excess of 5.5 million units a year. It's really hard to justify this. Base case price target to 250, previously 200. There's a few bits and pieces again. I'm pretty sure they're just reverse engineering a few dollars here and there to get to the 250. But core among this, they're assuming just 7.9 million units sold in 2030. And this is their base case, as in this is likely to happen. And now the bull case, 450, previously 390. I do just want to underscore this. This is what Morgan Stanley believed to be the bull case. Tesla delivering just 10 million units in 2030. Half Tesla's publicly stated goal, and just because you have a goal doesn't mean you'll get there, but do we have any historical evidence of Tesla setting out a fairly ambitious goal and getting close or missing, and how much did they miss by? Let's see here, 2014 they said 500,000 vehicles per year in 2020, and how many did they deliver in 2020? About 500,000. It seems like Tesla has a relatively solid track record of hitting long-term targets. Of course, it doesn't mean they'll be successful in 20 million vehicles a year at 2030, but 10 million, the bull case, I would be stunned if everything goes wrong. If Tesla still isn't selling in excess of 10 million units per year in 2030, in the absolute worst case scenario. We'll look at some of the underlying assumptions, and I'll try not to be too savage, but we might understand why these clowns think 10 million is bullish. Also, of note, in Morgan Stanley's bull case, their Tesla Network Services are valued at $98 per share on 25 million connected monthly active users at $120 monthly recurring revenue. This is basically the size of Tesla's fleet. Now, if Morgan Stanley think Tesla's only getting to 10 million units in 2030, reasonable estimate. But hypothetically, if Tesla gets to 20 million units, in a single year, they'd build almost Morgan Stanley's entire fleet estimate. I think Tesla's fleet's going to be closer to 100 million in 2030 than it is to 25. If you guys want to look at a summary of each of the bull, base, and bear cases, go for it. I've just highlighted unit production per year. Let's move on. Changes to estimates. Our estimates for Tesla Auto and our income statement for 2023 and 2024 remain relatively unchanged. We're just really embarrassed because Tesla went well past our price target, so we've had to fiddle all the other numbers miraculously without anything meaningful changing just to get to $250 per share so we don't look like total morons. Did I misread that? Oh no, I'm pretty sure that's what they said. With the majority of our change in price target primarily driven by a need to not be too embarrassed. I keep misreading this, I think. 2 ancillary business assumptions longer term. Network services, raising probability to 70% from 50% previously. Increased our price target by $14. Energy, raising our growth rate to 27.3% from 25.1% previously, with no change to gross margin. Increased our price target by $12. I'm just picturing them sitting in the spreadsheet going, okay, let me see. We'll add 0.5% to this number and change this cell to this. And oh, we're getting close. Hang on. Oh, yeah. Wait, 250, nearly there. Yeah. Oh, got it. 250. There we go. All right. Time to release this new note. I mean, is it just me? Did something meaningful and fundamental change about the growth rate of Tesla's energy business in the last couple of weeks? Maybe I missed something. Auto. We increased our 2024 auto gross margin to 18.5% versus 17.9% previously. Again, anything fundamental change? Not so sure about that. 2030 gross margin increased to 17.6% versus 17% previously. Blah, blah, blah. If you guys want to nerd out, you can see the full changes to their estimates in terms of the income statement. And by the way, I do appreciate the fact that Morgan Stanley are at least publishing the changes. But again, it kind of looks to me like they have reverse engineered. Oh, Tesla stock's passed our price target. What numbers do we need to change in our income statement to get to $250 per share so we don't look like clowns? As opposed to, what numbers do we think are actually going to happen in the future, and what fair valuation, aka price target, does that automatically produce? Also, never trust anyone with a round number price target. You should never ever, unless it's a coincidence, like a literally 1 in 100 chance, a 1% chance, have a round number for your price target. It should be a direct output of a valuation model, and it shouldn't magically end in $50 or $100. It shouldn't be a nice, clean, round number, should it? Always a massive red flag. If you want to understand exactly why I continue to be so obnoxious and just roast these folks relentlessly and admittedly a bit unreasonably, just check this out. These are Morgan Stanley's estimates for Tesla's core automotive business. On the right here, we've got 2030 estimates. That's where we're going to focus. On the left, we've got the units. We've got the Roadster, the Model S, X, 3, Y, Cybertruck, Compact, a van, and a semi. Now, Roadster, a couple of thousand units per year. Cool story, bro. Yep, probably close. Model S, maxing out at about 65,000 units per year. Yeah, whatever, fair enough. X, about 60,000. Cool, fair enough, whatever. Model 3, almost 2 million units per year, by the way. This is probably pretty close. Model Y, close to 3 million units per year, by the way. This is impressive. I actually tend to agree. They've got combined sales of the Model 3 and Y peaking out in 2030 in excess of 4 million. Call it 4.5 million units combined. This is about right. At least this is in line with my estimates. Mine could be wrong, but I think they're pretty much on the money. But here's where things get ridiculous. Cybertruck, 469,748. Notice, by the way, these are actual numbers. Everywhere else, 24, 25, it got round numbers. Strange. But I do just want to emphasize something here. Look at the number of vehicles they've got sold for the Compact. 1.7 million units, okay? Do I need to explain how dumb this is? How embarrassing this is? And how wrong this is? Let's just ignore any other information than what we're seeing here. If Morgan Stanley themselves think that Tesla's Model 3 could be selling over 1.7 million units and the Model Y could be selling almost 3 million units in 2030, why would it be that a compact vehicle for which the market is significantly larger than a large or mid-sized sedan or compact SUV, significantly larger market at a much lower price point? Remember, the 50% cheaper automotive manufacturing system and changes. Tesla unveiled this at Investor Day this year. We know they can make a vehicle for half price of the Model 3 and Y. That's what the Compact's going to be, half price. Why would a half price, compelling compact vehicle with a much larger market sell less units per year than the much higher priced, much smaller market Model 3 or Model Y? I just do not understand. What are they thinking, if they're thinking at all? How does this make any sense? I'm seriously curious. The fuck are these guys smoking? Now, surely they can't be saying, oh, well, it's going to take almost an entire decade to ramp up to 1.7 million units per year. So again, what are they smoking? This doesn't make any sense at all. These guys are smart. Surely they understand. A linear decrease in the price point creates an exponentially larger market. These estimates are nonsensical. I'm still left scratching my head. No matter which way you think about this, it makes no sense at all. It can't be a slow ramp. Not that slow, no. I'm just left confused. I mean, even for Morgan Stanley, this is a doozy. Moving on, Tesla is still our preferred way to play the long-term EV and battery onshoring theme, and it remains a must-own company in any EV portfolio. Tesla is in the midst of an industry-wide EV price war, falling margins, and oh, they said it again. EV market deceleration. Ladies and gentlemen, just remember, I'm recording this in June 2023, and Morgan Stanley have just published a new research note reiterating that they believe that the EV market is currently decelerating. If you say so. If the company wasn't benefiting from significant government incentives and price cuts, Tesla could be burning cash. Okay. However, within our coverage, we see Tesla as best positioned to navigate the geopolitical and economic challenges inherent in rewiring the EV battery supply chain. More than an AI play, we believe Tesla's role in building a de-risked EV supply chain is underappreciated by the market. Just finally, if you thought the roasting was done, well, Morgan Stanley themselves are a self-roasting entity, so I'm not going to need to add any further commentary on this. I just wanted to show you guys their North American automotive ranking table. These are stocks they're covering in the quote automotive industry. We've got rankings, e.g. OW overweight, EW equal weight, and UW underweight. In other words, overweight, buy this shit, equal weight, hold this shit, underweight, don't touch this shit. Ferrari, number 2, Ford. 3, Harley Davidson. 4, Government Motors. You did it, Mary. You managed to achieve an overweight rating from Morgan Stanley. I'm not going to read through all of these. I just wanted to put this on screen. No commentary necessary. Nothing further to add. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it. You'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment, see you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.